Good evening, trading friends. This video is about the weekly analysis of the NASDAQ of the coming weeks. Also, we need here to wait for a bunch of important data coming out the new week. This week is not so busy like the last week, but first of all, the Israel tension is to be continued. Also, the fear of the conflict spreading of the conflict, and as the conflict is getting hotter, is increasing. Then we have the Asia banking crisis beginning in Japan, and we look forward to monitor that closely too, because it will have a very big, important impact on the US dollar, and the US dollar is driving the market. The third one is the weekly data. On Monday, we're expecting the Empire State. And if the number is higher than expectation, it's bullish for the dollar. Nearly every data that will be released next week, if they are higher than expected, um, it will be positive for the US dollar and negative for NASDAQ. But expect unemployment data. Unemployment data should be positive or more higher than expected. It's not good for the US dollar, and possibly there it can turn the market. If the number is unexpected or near of expectation or lower, then it is good for the US dollar. The next part is here, as you can see, the dollar index. We trade based on volume profile and the dollar index. As long as the dollar index is bullish, we short the market. And we can see in a linear regression that the trend of the dollar index that has began on 18 and July the 19th of this year, the trend is really strong. The linear regression is now plus 0.97%, and that is supporting the strength of the US dollar. We have also some major keys here. For example, the October the 12th, as the retracement has been completed. And also, if we can see it here on August the 13th, and that was exactly this uh, period of time, was exactly the time as the indices reached their highest highs of this year, and the uptrend reversed and diverged. So keep eye on this data, very important. The US dollar is indicator number one, if you want, much more important than other or all other technical indicators. If the US dollar is running against you, then the other indicators will produce fake or wrong signals and very confusing signals. So we go now to NASDAQ of the last week, and we see the NASDAQ tried to fill the gap, but it was not successful. And as I told you, the reason was the pullback of the US dollar or US dollar index. That dollar became some way weaker, and that was, of course, for some speculations and some speculative matters. The market the buyers tried to push up the market. And I said also in the last week that we will have many bull traps, and as you can see here, we can grab all those bull traps very easily here. This is the volume profile of the last week, and we see here the NASDAQ broke the the val of the last week and entered the known value area. This is the first significant factor. But most importantly, we see here that our US dollar indicators or are up, meaning shorting the market, and it never goes well if the NASDAQ or the indices have an uptrend and the US dollar has the uptrend too. And sooner or later, the crash, the divergence and the fallback of the market will be much more heavier. We will have more volatility in the market because the US dollar is driving and dictating where the indices will or should go and should not go. And that was the reason that also in the last week, please watch also my prior 4 videos. I have mentioned how the technique is working. I told all the time that you should sell at this area, and you can see here this is the current state of the market at 14,990 14,979, which will be the opening price of the next week too. As well, I can say if the market tries to come up at around 15,154, 15,300 even, and if we break this through and come back to 15,559, as long as the US dollar trend is up and bullish, you should maybe think about selling. Why? Well, for some traders, it might be very interesting to think, okay, I can trade both markets, but I can tell you one, out of my experiences and all the data we have collected, it would not be a good idea to trade against the trend. Maybe you have luck, bunch of times, but over the long run, you will lose all the account and you will ruin your account. The linear regression of NASDAQ is currently at around zero, the downtrend 0.70, really strong, and NASDAQ will try to enter first this zone 14,860 and 14,726, entering the bearish area of the linear regression, sorry. And as you can see, the price is here, and if we come back now and enter this, we will fill the gap which is beginning with 14,504 high, and the low of the gap will be 14,244. But this time, NASDAQ will try also to fill the linear regression low at around 14,060. On the same time, if NASDAQ breaking 14,244 this time to reach 14,060, it will mean that we have broken a very important support time. As you can see here, the market has already tested 1, 2, we can say here 3, 4, 5. 5 times tested, and each time the stops of the bulls have been wiped out, and on the same time we have many orders on these areas, many selling orders of the big institutions that have their stop losses maybe much more higher than you can imagine, and they want in any case to reach this level. So we see here also that on July the 19th and also July the 28th, if you compare to the US dollar, exactly the trend of the US dollar predicted to the penny where NASDAQ and other indices will collapse, right? So monitor always the US dollar trend, and on the same time, the three brothers, NASDAQ, S&P 500, and Russell should be synced and running in the same direction. If one of them is running in the divergent direction, then we will have a consolidation, but a bearish consolidation, right? So now, last not least, we go to the weekly chart. And the weekly chart, we see two very important and interesting big triangles. This is the current price, but we see here at around where the gap is at around 14,322 to below 14,220 288. This is the crossing point of the bearish and bullish trend lines of this gap, and the market, I will try to demonstrate it that way. So let's say this is our crossing point, right? And if the market is trying to get higher but cannot break, this is the wedge resistance. The market will try to retrace, and if breaking, then we go back to the beginning of the wedge, right? So, and we have exactly the same situation also here, meaning that if we break that gap level after level at 13,688, 12,895, 11,830, and so on, we go first of all to the level the markets began to start to rise their bullish move this year. And if breaking that, we go back for a longer term to around 16,000 area. If the market does not do that, then we go then first of all break all these levels, but it would be very difficult as long as the US dollar is rising, right? So we need a second condition: the US dollar must come down. If it happens, then the market tries to go for this price at around 16,000 to 16,082, and then if breaking that, we go higher. But it will not happen next week, surely not. And I doubt if it happens until February or March of next year, but this is another discussion. We need, first of all, to monitor all the time the impact of the data on the US dollar. And as long as the US dollar is long, we or is bullish, we stay bearish on the indices. You can use your proper trading strategies, how to find out the selling points and well, bullish opportunities and also bearish opportunities, taking profits with on the bullish side, but entering the market on the bearish side. If you are day traders, then using then possibly other divergence strategies. So I hope this could help a little bit. Monitor the data, but first of all, monitor the NASDAQ, and most importantly, the US dollar direction. Very, very, very important, right? And to monitor the US dollar movement, it's not too hard. So you can use one of my indicators, or you can also use two monitors. On one side, the US dollar, and then you use your favorite strategy to track the US dollar. And on the same time, you trade the market you are in. The US dollar has also very positive correlation to the crude oil, because it doesn't matter where the crude oil price is. The crude oil price, for example, is converted in US dollar. Whatever price it might it be cheap. If cheaper countries will buy more oil, of course, and they get oil for cheaper US dollar, but at the same time they need to convert their own currencies in the US dollar, meaning they sell their own currency and buy the US dollar. That will create new demand and supply in the US dollar market. And if the price is higher, but the countries are still dependent, so they are willing and agreeing to pay any price of the US dollar. So they will, in any case, change their currencies into petrodollar, and then the petrodollar converted into US dollar, and that will push again the US dollar much more higher. Right. So have a nice evening. I hope this could help you a little bit, and have a good night and have good luck for the next week.